My name is Jay Meisler, and in the following short video, I'm going to show you how to day trade using the AT Ladder Strategy Checklist. I like to use a 15-minute chart for day trading because it serves a dual purpose. It cuts out the noise often seen in a 5-minute chart, and it gives you more opportunities to enter and exit trades than in a longer term chart, say 1 and 4 hours. Doesn't mean you shouldn't look at 4 hours or 1 hour or use it to trade, but I personally prefer the 15-minute, as I'm going to show you in this short video. Now, when you went through the checklist, the AT Ladder Strategy checklist, I showed you the importance of identifying an episode. This is a Euro-Dollar chart, February 12, 2020, 15-minute chart. You can see this was an up episode early in the day. Treat it as a correction because the overall trend is down in the euro. These two lines here, these ladder rungs, the start of the ladder, we call a directional indicator, all explained in our ladder strategy course. This is the first sign of a top. The more ladder rungs you have, the more confirmation that the episode up had ended and a new one to the downside begins. So how do we treat this information? If you remember the checklist, number one was identify the episode. We identified it as down. That tells you what side to trade, the strong side. The strong side is the downside, and the more ladder rungs you have, the farther you went away from this level over here, the higher the day, and the farther away from any stops on the upside. So when the euro stops to run on the upside, they tend to probe the downside for stops. And that's where the risk is on the downside. Then we enter trades. First we do is we identify our stop. A stop is at the most recent rung of a ladder. In this case, an Amazing Trader blue line is a ladder rung. So if you would have entered a trade anywhere along this pathway and put a stop above the most recent ladder rung, an Amazing Trader line, you would have stayed in your position. And in fact, you had multiple opportunities to do so, depending on when you entered the day as a day trader. And the point is, as long as you're comfortable with the risk, with the stop above the most recent rung in the ladder, as long as that ladder stays untouched, the episode's intact and the risk is on the downside. So that's how we enter a trade. And then, of course, you could set your target. Now, I mentioned multiple time frames. So here's your 1 hour chart. You can see we've been basically straight down since the high of the day, around 109.25 or so. There's been no retracements, no blue lines, no ladder rungs. So if you're looking to enter a trade, you had to kind of close your eyes, jump in, put a stop above the high of the day, and let it ride. On the other hand, if you followed my logic of using a 15-minute chart, you could have positioned in the 15-minute chart and managed it in the 1 hour chart, which in case you would not have gotten out as there was no reason to do so except maybe a pause over here. But with no blue lines, the risk remained on the downside. I explained this fully in the ladder strategy course, how to trade with multiple time frames. That's one of the rare exceptions that I do it. So now you've seen how you could use the ladder strategy following our checklist to trade. It's logical, it makes sense, it's tradable, and something that you can use in real time.